Thank you so much, Tatiana, and thank you, Arizona Association of Realtors, for having me. Just a little personal fun fact is Arizona is one of my favorite places to visit, so I'm very excited about this. So if you can go back, Monica, to the previous slide, you want to just pause for a moment just to kind of set the stage for today. So I really want to thank you for the partnership that we're going to have to bring to all the members. This is the first of 3 webinars we're going to conduct. And basically, we want to help you focus on helping your business prepare for home buying season and beyond. There's a lot of information in the market, and we want to make sure that some of that information is available and streamlined for you, and talk about some of the things that are going on in the housing market from an economic standpoint, also future home buyers, trends, affordable products, tools, and solutions available to your clients, first-time home buyers, those who are serving the low to moderate income, and help your clients also tackle some of the obstacles with the aged housing stock out there. So during this first session, we're going to be diving into a lot of housing market data and trends. We're also going to be talking about future home buyer trends. This is really to level set how the market is changing, what is to come from a future home buyer perspective, so that you can prepare your business for the younger, more diverse, and ladies, female home buyer, because we are making a lot of progress in that area. So if you can go ahead to the next slide, just a little bit of an overview of who I am. So again, I'm Marlena Scott. I am an affordable lending manager here. I represent and manage, real estate professional relationships across the country. My role is to provide education on the affordable products that are available that Freddie Mac has for low to moderate income, very low income, as well as first-time home buyers. Provide information on the tools and resources available to help you grow your business, and maybe that you are not aware of. So now that you know who I am, let's talk about who Freddie Mac is. It's important to know our role in the industry. So recently, if you can go to the next slide, we celebrated 50 years of making home possible in 2020. And I think we can all agree this is a year that we will not forget, but this was a year that we celebrated 50 years of this. Our role in what we were scheduled to, or chartered to do by Congress, is to promote liquidity, stability, affordability, and equality in housing nationwide. This past year has proven that our role is more important than ever. Our community mission is to stabilize communities, prevent foreclosures, expand credit responsibly, educate future home buyers, and also support an affordable rental housing market. There are 3 main lines of business: single family, which I'm a part of, multifamily, as well as capital markets. So now that you know a background of how we were configured, let's talk about what our role is. So we operate again in the secondary market, but what does that mean? We do not lend money directly. We buy the mortgage loans that meet our requirements from approved lenders, most of who you actually work with. Once the lenders receive the money from us based off of the loans they sell us, we can then allow them to free up more available liquidity to make more loans for qualified home buyers. We then pull those mortgages together into securities and sell those off to investors worldwide, which in turn gives us money to be able to buy more loans from more lenders. This cycle continues over and over. There are trillions of dollars going into making this whole idea and vision of the American dream, as well as home possible, into the system. So on the next slide, we will see that we also created an initiative because there's so much that goes into this entire process. We decided to create an initiative called All for Home. This brings all sides of the business really together because we all work together to make home possible. You as the real estate agent are at the center of this entire mortgage process and transaction. You are the trusted advisor. But there's also many other players in the ecosystem that tie into what you do on a day-to-day basis. So we wanted to make sure that we are providing partnership opportunities, collaborative opportunities to drive business and to continue to make that dream of home possible. So again, we're all in this together, all for home. I know it sounds very simple, but really there's a lot that goes into it, and we want to make sure that we're aware of everyone that we're working with to make all of this happen. On the next slide, you'll see we're going to start off talking about the state of the housing market. The market in 2020 took off, so let's talk about where we came from, where we are, and where we're going. Now, this is a busy slide, so I will go to the next slide. From a macroeconomic level, the availability of the COVID-19 vaccine and its widespread distribution should steer the economy towards recovery, but the timelines on this does remain a little uncertain. The labor market had suffered lows, and reached its lows as of April last year, but it continues to be weaker than we expected. As of mid-December 2020, jobless claims were around 20 million, remaining well above the pre-pandemic levels. The unemployment rate as of December was at 6.7%. But the housing market overall rebounded strongly over the summer and continued to perform well in the second half of the year. One of those reasons, of course, as we know, are the low mortgage rates. Mortgage rates hit record lows in 2020, and this low mortgage interest rate environment is projected to continue through 2021 and 2022, as the Federal Reserve has voted to keep the interest rates lower. The surge in home sales put pressure on housing inventory and did cause the unsold inventory to hit an ultimate low of 1.23 million, which only leaves us with a supply of about 2.3 months at the current sales price. The high volume of home sales, low supply of housing really has edged up the prices overall. We saw that at 4% quarter over quarter up until the fourth quarter of 2020. Freddie Mac actually forecasts that housing growth is going to be moderate in 2021 and into 2022, so from 1.3% to about 0.7% respectively. But with the low mortgage rates, increasing home sales and increasing home prices have also boosted, I'm sorry, can you go back? Thanks. Thank you. It also increased mortgage originations. So total originations hit a historic level of about 4 trillion, with refinance originations really driving most of that. We're going to continue to see that growth or to see that consistency, but it is going to taper off this year. So if you can go to the next slide, you'll actually see a visual of this snapshot that we're forecasting. You can see back in 2019 where we started. We were only at about 2.4 trillion as far as originations were concerned, and we skyrocketed in 2020. And then as you can see, 2021 is going to remain fairly steady. House price growth is going to reduce, and then into 2022, we're probably going to level off and reduce even further. On the next slide, you're going to see another visual just of how much the refinance market took off. You can see that it accounted for $2.6 trillion of the overall originations in 2020. That was huge. I'm sure some of your clients may have reached out to you about how to refinance, to take advantage of these lower interest rates. Purchase market also was at about 1.4 trillion. In comparison, over the last decade or so, this was one of our, one of the biggest years in the mortgage industry as a whole. So on the next slide, you're going to see, we're going to talk about, we talked about originations. Let's talk about homeownership rates. Homeownership rates have not grown that much. The United States overall is about 65.8%, which is a slight uptick since 2019. We then wanted to break that out by all of the different regions. And as you can see, there's been minimal growth, with the highest growth being in the South. The West actually had the lowest amount of growth to 60.4% of homeownership. So I want to pause there for a moment. When we talk about homeownership, I want to get your feedback on what some of the biggest challenges to homeownership or barriers to homeownership are. We hear a lot about inventory, credit, debt, things like that. So if you don't mind, I'd like to take a pause and put that into the chat and get your feedback on this. All right, so we're seeing some buyer competition, inventory, money for repairs if something breaks, just the sustainability, conventional versus cash. Anyone else? Don't be shy. The prices, yes. So this is pretty consistent with what we've seen as far as barriers to homeownership. And this is something that, throughout these next 3 webinars, including today, we're going to address to try and overcome some of those challenges, but we know that they are very much a part of our day-to-day business. So I just wanted to pause there for a moment and talk about that homeownership rate. And again, back to this, the regions also have an issue just because there's not a lot of vacancy available. So again, going back to the inventory that everyone mentioned just a few seconds ago. So on the next slide, we'll take a look at the mortgage market, the primary mortgage market. We took a survey, and this is actually the U.S. weekly average mortgage rates as of February 11th, 2021. And what we're seeing now in the economy is it's a tale of two economies, if you will. You have the service economy that remains, kind of in the doldrums, but then you have the production side of the economy, which remains strong. With the new COVID cases receding, it's encouraging. This led to the treasury rates to increase. But that increase actually did not impact mortgage rates yet. They've held pretty consistent. So the residential mortgage market is remaining strong and it's solid given the purchase demand. But it's implied that due to the high price inventory shortage that's plaguing, this can have an impact down the road. So in the next slide, you're going to see appreciation. And I'm sure all of you have felt this in your day-to-day business. Overall, the appreciation in the United States was 9.7% as of October 2020. This is definitely a seller's market. You can see that 14% was actually in Arizona. So pretty consistent across the country as far as growth is concerned. This is great for people who are selling their homes, for just building equity in their homes. But again, across the country, we saw this growth as consistent. On the next slide, you're going to see, even though the appreciation is consistent, the inventory is a little scarce. So this is a huge challenge that we're seeing, and unfortunately, this map doesn't provide a beautiful outcome. It's right on point with what we're feeling in the market. And so basically, the way that this actually reads is that this is calculated based off of the amount of sale inventory to the amount of, or inventory based off until the amount of homes available. And basically you can see that the light yellow represents less than 2, a ratio of 2. The tan is 2 to 4. And then the darker tan is 4 to 6. And then the red means that there's higher inventory available. So you can see that that's consistent in Florida and then also up in the Northeast. But across the country, this is, unfortunately what we're looking at. And it's not positive, but hopefully in the coming years with building and things like that, we'll be able to get to more inventory. So on the next slide, this is going to really prepare us for the continuation of our presentation, which is really going to focus on your clients, what is occurring across the country, what we're seeing as far as the shifting demographics, first-time home buyers. What we saw in 2020 was that household formations increased to 1.5 million. This was an increase from 653,000 back in 2013. That's huge. Millennials have to be top of mind. They're going to be a big part of our conversation over the next couple of slides. If we were in person, I would make you raise your hand if you are a millennial parent that still has your millennial at home. But we're showing that about 25% of millennials are or were living with their parents. And we expect, of course, them to be the biggest millennial household formation in the years to come, and I'll get to that in a moment. Minority shares of households are actually going to increase to about 75% by 2025. So these are shifting demographics that we're, really hitting in on, and how, your future home buyer is going to change. Millennial households are actually projected to increase by 2035 to 49.8 million households. So just to pause here for a moment, back in 2015, they were at 16 million. They're expected to go to 49.8 million. That means there is going to be a just influx of millennials who are 39 and lower to about 24 years old, I believe. That's the range, who are going to be looking for a home. One of the issues they're going to find is aged housing stock, inventory challenges, down payment, budgeting, student loans, all of which we're going to talk about in just a moment. But your business can strategize on how to help these millennials, how to have the right tools, how to have the right solutions available. So when they come to you, they don't seem so hopeless, and we can provide them with some insight on how to get into a home and achieve the American dream. 31 million households are going to be made up of those 65 and older by 2025 as well. So if you go to the next slide, we will start talking about how that changing home buyer. I know I covered a lot of data information, but let's bring it back to your clients and how that's going to look. So the US is becoming more diverse. The biggest diversity that we've been able, or the biggest growth in diversity that we see is between the ages of 18 to 39. Those populations in the Hispanic and Asian American Pacific Islander, as well as Black community, are increasing in those particular age bracket. This is in alignment with millennials. Millennials are the most diverse population in the entire country. They're also the largest population in the country, even compared to baby boomers. We also see a lot of growth in the 40 to 64-year-old range as far as diversity is concerned. By 2045, we do anticipate that minorities combined will actually make up to the majority. So really understanding that your future home buyer is going to be more diverse, and how will you manage your business and work with this increasing population. So as far as first-time home buyer trends and demographics are concerned, it actually decreased back in this year in 2020 to 31% from 33% the year before. Now, this is not good news because this is one of the lowest that we've seen since 1987 when it got to 30%. And a lot of those barriers that I heard from in the chat really add to that. But of the first-time home buyers, 86% of them were younger millennials, 52% were older millennials, really making up to the biggest out of all of the age groups. Now, it gives you a breakdown on this slide of the age brackets. So the 52% were the 30 to 39, and 88% were 29 years and younger. So again, incorporating the Gen Z population that's also coming up, who find homeownership to be very important in your strategy for how you work with the younger generation. So down payment resources, I'm going to skip to that. That is 78% use savings, 24% get that from gifts from friends or relatives. I would love to have those friends or relatives that would provide that, but this is the sources of down payment that we're able to see. 25%, and I want you to take a note of this, 25% use FHA loans. Now, a lot of first-time homebuyers tend to go navigate or get into FHA loans. But it's important to also know that there are some other conventional low down payment products out there other than FHA loans that can actually help your buyers save more money, and I'll touch on them in just a moment. And on this slide in the diagram, in the circle diagram, the biggest piece that I want to point out, and we're going to talk about in a moment, is single women. They're making up to 18% of first-time home buyers. So what that means is they're the second largest growing segment as far as home buyers are concerned. Millennials, more diverse buyers, women. How are you preparing your business from a strategy perspective to engage with these different household formations or compositions? You have the unmarried couples at 9%, single males at 9%, and then of course, married couples making up to the majority at 64%. If you go to the next slide, we'll take a deeper dive into what the millennials characteristics are. So again, they're more likely to form new households. Over 85%, consider home purchase a good financial investment. There's a lot of income growth that we've seen amongst younger adults. They tend to use the internet for searching for houses, but they rely heavily on a realtor to complete the purchase. This really solidifies the role of the realtor in the transaction overall. I know that millennials sometimes get bombarded or put into a group of being, tech savvy, maybe not as personal, maybe don't feel like they need as much help, that they actually do require that from, they want to have a trusted advisor throughout the entire process, because it is a really huge decision, and a lot of them, the feedback is that they need that extra guidance. I am an older millennial who was a first-time home buyer about 2 years ago, and even being in the industry, I knew that I needed to have my advisor to answer any questions, to kind of provide that hand-holding, if you will, to add a different level of comfort, which is what a lot of people need, especially the younger generation. All right, if you would like to go to the next slide, Monica, thank you. So where are the mortgage-ready millennials actually positioned? So we at Freddie Mac decided to do a study on mortgage-ready. What that means is 45 years and younger, we decided to take a population focused on a credit score of 620 or higher, a debt to income less than or equal to 25%, minimal delinquency, and we came up with about 27 million mortgage-ready millennials across the country. This is, I know you guys are going to be like, she's a broken record, but millennials really are where your business is going. So if you can see on this slide, and of course you'll get all of this information, the bubbles represent who is mortgage ready. So in Arizona area, there's the green, which shows that less than 50% in those certain markets are less than 50% mortgage ready. The purple represents 50 to 75% are mortgage ready of the millennials in that market, and then the blue represents greater than 75%, which there are a couple of those as well in Arizona. This is a great opportunity, though, if you look across the country, to expand your referral network, to continue to network and build all of that, because there's migration patterns happening as well. They tend to move to more affordable areas. They are highly concentrated in coastal areas, so that makes affordability, of course, a challenge. So we're anticipating that they'll be, migrating a little bit more in the coming years. But this is really giving you a visual of where they're located and how and who is ready to own a home today. On the next slide, you'll see the biggest topic that we come across with the younger generation, and that is student loan debt. Student loan debt keeps a lot of people from the table. They feel that because they have this student loan debt, they cannot get into a home, when in fact that is not the case. We have to start changing the conversation, and so this is why I want to bring this to your attention. So we took a look at the student loan debt that was out there, and we actually found that only 20% of millennials had student loan debt. Now, I do know that this is going to be different across all demographics, so we did not break that down in this particular slide, but we do know that it's higher amongst some certain demographics. But the point is there's 90% that don't have student loans. The older millennials tend to have a little bit more of, or carry more of the student loan debt, and they average about $10,000 plus. So really understanding that there are affordable products, which again we'll get to in a moment, that really help with navigating the student loan debt balance with being able to get into a home. It's not an end-all be-all, and it's really just making sure that the client is comfortable and you are also comfortable in finding solutions that can help them to get into their home, even with the student loan debt that's out there, and not everyone is plagued with student loan debt. So we've talked about millennials. Let's move on to the new compositions of homebuyer households. Again, we're going to spend the next couple slides talking about single women and females. Single females are the second largest home buying segment. Those buyers 65 to 73 make up to the highest share, which is about 22%. Of course, they're less likely to have children under the age of 18 at home. So how are you engaging? We can see it all across LinkedIn and all the different news networks and things like that, we're seeing that women are, head of household. They're also excelling in their careers. So it only makes sense that they're going to start to purchase their own homes and kind of shift the household compositions that we've been seeing over the past years. Another household composition that I want to point out on here is the age bracket of 22 to 29. You can see that unmarried couples make up to 21%. So really the purpose of looking at all of this is that the households are shifting. The married couples, of course, are always going to be the majority, but there is going to be a change in the household compositions and the home buyers that are coming to you, to purchase a home. On the next slide, we wanted to do a study because females are trending in such a high way in the home mortgage market. We wanted to do a comparison of future male and female homeownership expectation rates. We started this back in 2016. As you can see, of course, that males do trend higher when they expect to buy a home. And according to the survey, 66% of women said they expect to buy a home compared to 71% of men. But the follow-up up to this was that women actually are executing and proceeding with that home buying purchase once they make their minds up to do that. at a higher rate than males actually are. So even though there's a lot of success in what's going on, or we'll talk about, I'm sorry, I skipped my own self. Oh, you can go ahead, Monica, sorry about that. How satisfied were women and versus men as far as purchasing a home? And found that 63% of female owners satisfied with their owning experience compared to 58% of males. So some of the characteristics are that they tend to, purchase homes that might cost a little bit more, and I'm not surprised because we like to have nice things. And they're also concentrated in areas like Florida. But they tend to, when they're making the decision, they take a lot of different things into consideration. And this really leads to the satisfaction of what they experience. So in the next slide, we'll round out, they're making headway in the mortgage industry, but we can't ignore the fact that women unemployment rate really did spike during COVID-19. It was the highest job loss since 1948, and then higher than the Great Recession. So they were, of course, women were, in hardest hit industries such as leisure, hospitality, healthcare, and education. And then with that, Black and Hispanic women lost jobs at a disproportionate rate. So while we're making, waves in the home buying industry, we can't forget that we're also being impacted with, women are also being impacted, over the last year due to COVID-19. So let's talk about what's going on locally, because I know that's good information for you guys. And so I want to spend the next 3 slides just to talk about from a population standpoint, owner occupancy, and then tie it back to credit. So we've been speaking about millennials, the younger generation. Arizona actually trends higher in the 25 to 34-year-old age bracket than the overall US population. This is consistent across the board. Most of the population in Arizona in the different markets trend from 25 to 44 years as the highest of the populations. Tucson tends to have a higher 20 to 24-year-old age bracket because, of course, colleges and things like that add to this whole entire population. But this is really representative of, the home buyers to come. And you guys have a great market in Arizona across the different cities for this opportunity. If you go to the next slide, we'll break down the owner occupied versus the renter occupancy. The purpose of looking at this is basically to let you know who is actually renting, who is owning. A lot of business opportunities come from this information because, as you can see, 64% of the United States owns. Arizona is higher than that. Of course, over the next several years, and even now, you're going to see people are going to be looking to downsize. They're going to be looking to expand based off of maybe family expansion. Maybe they just want condos. So really understanding who currently, there's a large population of owning homes and opportunities from that standpoint. But then you look at the renters. How do we turn renters into homeowners? Having those conversations or having those strategies in place that owning your home is going to save, renting is not helping you build equity. Owning your home will. And I know, of course, there's the barriers that we talk about, but this is really just giving you a snapshot of who owns and who rents in the state of Arizona and across the different cities. So on the last slide, the average credit score. And the reason why I wanted to pull out the credit information for your market is the average credit score right now is 694. Across Arizona, it's trending a little bit lower. But what I wanted to hone in on is that along with student debts, we have to change the conversation on credit. You will actually be amazed at how many people, just look at a low credit score and think, well, they automatically have bad credit. Sometimes there's just a lack of established credit that actually is impacting their credit score, meaning they have nothing established. So if you take a little bit of time to, say, hey, this is, you've got to establish some credit. You might have that homeowner or a potential homeowner come back to you in a few months, 6 months to a year, that says, hey, I've established credit, and now they have a, I'll just use a 710 credit score. But you took time to say, you know what, it's not that you have bad credit, you just don't have any credit. We need you to go out there and establish your credit, come back to me, and I'll be ready to help you. In other cases, you have people who may just have, like, let's say one medical bill or something like that, and that's dragging their credit score down. Well, that's easy if we can, go ahead and pay it or come up with a plan. Or have some sort of financial education or financial literacy ready at their fingertips. My colleague Monica is going to talk about that financial education that's available, but that helps to build your buyer pipeline. Just because someone's credit score is not where it necessarily needs to be doesn't mean they're discounted or out of the game of owning a home. Just might mean that they need a little bit of extra help or support to get there. So what does all this information mean? We've gotten through the data, we've gotten through the trends. This means that the purchase market, the market right now remains pretty strong. There are a lot of qualified home buyers out there and they need your help overcoming some of the challenges and misconceptions. Prepare your business for the changing demographics because it's starting now and it's going to continue through the future. And then we at Freddie Mac we are providing insights education through this series on mortgage products, business solutions that we'll get to in just a moment to help you serve more qualified home buyers. So let's get into almost to the product piece of this, but we're going to identify borrower needs. How does that happen? Why do we need to identify borrower needs? So if you can go to the next slide. Basically, we want to help reduce the barriers. We keep talking about barriers, but they are real, and we want to help raise hope for first-time home buyers, low to moderate income, those in underserved communities, current homeowners facing financial difficulties, those I just spoke about that might need some financial education. Home buyers are looking for low down payment options, down payment assistance, and they're also looking for flexible products that allow them to have flexible sources of funds. So this is all that you cover on the next slide. With your clients, you talk about all of this. Available funds for closing. You have 3%, 5%, 10%, or 20%. We have to dispel the myth of 20%. That is keeping a lot of clients, a lot of potential home buyers from the table. It's no longer a thing, if you will. The average down payment right now is 12%. And most millennials, they're coming in at about 10%. But they need to know exactly what's available. And FHA is actually 3.5%. So we're going to actually talk about a 3% low down payment option on the next couple of slides. If you want to move to the next slide, let's talk about the business solutions. All right, so I'm going to introduce to you very high level Home Possible Mortgage. This is going to set the stage for the next session that we have, which you will find out how to use it, when to use it, and all of the details of this product. But this is something that you need to have in your tool belt. This is designed to help very low to low income, as well as first-time home buyers with a low down payment option. It is a conventional mortgage. It will help you, grow your business. It has features that help to expand access to credit, and there's guidelines to help with sustainable homeownership for borrowers that come into this, fall into this category. If you go to the next slide, we'll talk about the benefits. So this is, again, 3% down. There are flexible sources of funds for down payment and closing costs. The difference from this and FHA is that the mortgage insurance on this can be canceled once it reaches below 80% or 80% or lower loan to value. There's a difference between FHA and this and Home Possible, because FHA, it's on, as we know, for the life of the loan most times. This product is also not limited to first-time home buyers. The appraisal is a normal conventional appraisal, different again from FHA, and not knocking FHA because it's a great product. But again, if you can save your home buyer money at the front end and help them build equity faster, why not use that solution? And it allows for non-traditional credit as well. And there's also home buyer education that helps borrowers prepare for the responsibilities. And it's also, there's no cost to it. And again, we'll get to that a little bit later. There is an 80% area median income cap on this. So if you go to the next slide, we'll talk about the product that we created to tackle that obstacle. So Home One is our 3% conventional mortgage product as well. And this is for first-time home buyers. First-time home buyers, meaning anyone who hasn't owned a home in 3 years or less. Only one home buyer has to be a first-time home buyer. There are no geographical or income limits on this. So this is perfect for your buyer that maybe has high income, lives in a high cost area. This is a perfect solution for them. And this is also, again, conventional. So the next series is actually going to take a deep dive into each one of these products, but I want to introduce them to you now because as a solution to all of the things we just spoke about earlier, this will actually help tackle some of those challenges. So on the next slide, you'll see that in addition to affordable products, we wanted to come up with things to target aged housing stock. It's huge, it's everywhere. Most of the homes in the country are 20 years or older. So we created Choice Renovation, which is a single close mortgage product that can be paired with our Home Possible or Home One that finances renovations and repairs. This is great because it's no out-of-pocket expense to the borrower. They don't have to worry about going to Lowe's and opening up a credit card to do renovations. This can all be in a one single close transaction. In addition to that, we created Green Choice Mortgages. This is to help with some of the energy and water efficiency home improvements. This is, again, a single close. It can be partnered with Home Possible or Home One. This is really to help with those aged homes that maybe need upgraded windows, maybe need some upgraded heating, electric, things like that. We created those because we wanted to expand opportunities for people to overcome these challenges. Then we also partnered to create a manufactured housing called Choice Home. This is financing for factory-built homes. They, of course, need to be fixed to the permanent foundations, entitled as real property. And then lastly, shared equity home ownership. This is financing for homes with lasting affordability administered by not-for-profits or state and local governments. So in the third series, we will be covering the Choice Renovation Green Choice product offerings in great detail. You go to the next slide. So these are the additional webinar dates. I just want to plug these just so that you can come back and get some more information on April 15th at 11 a.m. Pacific Eastern Time, or Pacific Standard Time. I'm on Eastern Time, sorry. Discover the possibilities with Home Possible Mortgages and Home One. We'll go into greater detail. You will get all the information, all the ins and outs that you need to walk away with feeling very confident about these products. Then the session 3 is going to talk about Choice Renovation and Green Choice, just as I mentioned earlier. Just another way to have some solutions to help with those aged homes, inventory challenges, and that's going to be May 20th at 1 p.m. So if you go to the next slide, I am going to now bring on my colleague, Monica LaCroix, who's going to walk you through some of the business resources that are Freddie Mac resources that we have to support your business.
Thank you, Marlena. Okay, perfect. Couldn't tell if I was on mute or not. Awesome. So I'm going to cover some resources and tools that are available to help both you as a real estate professional and your buyers. Everything we covered today is free to you. The first is My Home. My Home by Freddie Mac is a consumer-facing website that provides answers to common questions related to home ownership. The website has information like videos, infographics, quizzes that your buyers can use to gain knowledge about the home buying process. It's a great tool to use after an open house. When following up with those who attended, include this website in an email. Your buyers can go again and peruse without ads, so it's a great pressure-free place for them to gain some knowledge. It's a great tool for you to use to fish for more buyers. Post this on your social media page. Remind your followers that you are the go-to when it comes time to buying a home. The website also has information for consumers looking to rent, refinance, or sell. I took a look again at the chat, and we talked about what are some of the largest barriers to home ownership, and down payment is definitely one of those. Marlena mentioned that the average right now is about 12%. And it's definitely on the mind of everyone. So we partner with a company called Down Payment Resources. It's a consumer-facing website where your buyers or even you can go to gain knowledge about the down payment assistance available in your market. I recommend you go type in the address of one of your listings. You might be surprised to learn that the house you're selling could be eligible for some free money. And again, all of these websites and links will be available after the webinar. We here at Freddie Mac have many tools and resources to help you reach and educate first-time home buyers. Marlena laid the foundation for financial education, and that is Credit Smart. Credit Smart is actually turning 20 this year. And what it is, it's financial education to teach consumers about the home buying process, as well as how to sustain and stay in their homes. It's 12 modules. Some of the topics are closing on a loan, avoiding credit traps. And it's designed to, get people ready to purchase a home and then again, stay in it. Marlena talked about saving for that down payment, maybe that 3% down they're trying to save for it. This curriculum has actually budget sheets where your buyers can actually download those to create their own savings plan. We also touched on credit, the importance of your credit score. There's a whole module dedicated with actionable items and takeaways that your buyers can use to start increasing their credit score. So definitely it's free for everyone to use. We actually have a Credit Smart Train the Trainer program where you as a real estate professional can actually become certified to teach Credit Smart in your community. It's free, again, to get certified. It's 4 90-minute webinars right now. We host it virtually about 4 times a year. So if you visit the website, you'll get more information about the upcoming trainings. I think it was December of 2019, we added to our Credit Smart suite with a Credit Smart Homebuyer U. Again, this is free education for you and your buyers, but this actually walks them through the home buying process. It's self-paced, online, it's very mobile friendly. I took it myself, actually using my iPhone. It's very engaging. You can start and stop whenever you want. If your client's on their lunch break, they want to do 15 minutes, they go back home, they can actually log in and it remembers exactly where they left off. One important thing to note about Credit Smart Homebuyer U is that it meets the financial or the homebuyer education requirement for buyers seeking to use Home Possible or a Home One. So as soon as they complete the course, they do get a certificate. It can go straight to their lender to be saved in their file ready for closing. Again, free tool for you and your buyers. Now, living with COVID has become the new normal for everyone. And we've definitely have experienced it in different ways and at different times. I want to remind you of some of the resources that Freddie Mac has to help homeowners navigate these sort of challenges. The first is, if somebody is experiencing a hardship and they're reaching out to you, the first person they should call is their servicer. It's important for them to be honest and upfront and to reach out before any payments are missed. And it's a great opportunity for them to explore the options that are available to them. There are many of them, whether it's a loan modification, payment deferral, and we actually have a Freddie Mac loan lookup tool where they can actually find out if Freddie Mac owns their mortgage. We also, if we don't, there's a link to our sister company, Fannie Mae, where they can actually go and see if Fannie Mae owns their mortgage as well. So, to help better navigate these hardships, we created an initiative called #HelpStartsHere. And what it is, it's an interactive guide that provides a roadmap to understanding the options that are available to sustain your homeownership. The campaign outlines options and alternatives for homeowners that could have been affected by COVID. Now that could mean they themselves have had they fell ill, a family member, maybe they had a change in income due to a loss of a job or whatnot. It also defines, what forbearance is. What is it? How is it going to affect their finances in both the short and the long term? And then unfortunately, in times like this, there are bad people out there that might try to take advantage of people. And so we actually put together some scams to avoid and better protect yourself. So it's great. Visit the website, become familiar with some of the resources we have in case your past clients are reaching out for help in these areas. Marlena talked about, the future homeowners and the buyers that are currently, changing. And we've partnered with our sister company, Fannie Mae, and our regulator, FHFA, to create an online standard clearinghouse of translated mortgage documents. I think we've translated over about 500 documents into Chinese, Spanish, Korean, Tagalog, and Vietnamese. It's important that we provide tools like this to make home possible for all. Visit the website, learn an industry term in a new language. It's very fun and interactive to go there as well. Again, free resource available to you and your buyers. The next few slides are going to cover some of the resources that are available to you as a real estate professional. The housing market is constantly changing, and it's important that we stay up to date with the news and information. Freddie Mac can help you do that. What we've developed are some ebooks that feature Freddie Mac data and insights that showcase needs and opportunities in the market. Our Affordable Lending Insights page is also a great website to bookmark. It has quick read articles that cover information about the current market trends. And there's actually links directly from our insights page that can be shared on your Facebook, your LinkedIn, that will highlight to your viewers of your website that you're a trusted source in the industry, that you're providing content, and that your knowledge base is understanding the current market and the current market trends. So great website to bookmark. We also started a podcast. Everyone's starting a podcast. Our podcast is called Home Starts Here, and it's great. They're about 10 to 15 minute episodes. I think we probably release one maybe once a month. They're great to listen when you're in between listing appointments. You can subscribe on the Apple's iTunes or the Google Play Store. Great other insight for you to gain information about what's going on in the industry. The last resource that I want to cover is our Real Estate Professionals Resource Center. We don't sell anything. We can't market to your buyers. We are truly here to be your partner to make home possible. Subscribe to our website by going to FreddieMac.com/real estate pros. When you get to the website, you're going to scroll all the way down to the bottom of the page. There's going to be a little box. You'll enter your email address and click sign up. What we share on our emails are key insights, industry trends, upcoming events like the one we're hosting today to keep you engaged and up to speed on what's going on in the market. So those are the resources. Again, the presentation is going to be available and sent out afterwards. All the links to these resources are going to be available to you now. I'm going to pass it back over to Marlena and Tatiana to see if there's any questions. So if you do have any, please use now the chat button or the chat box to add any questions that you might have. I'll pass it back to you guys.
All right, thank you, Monica. Does anyone have any questions about anything that was discussed? Feel free to put them in the chat. You can unmute if you would like.
And also, if you get the information and you have any questions later, you can always, we can take those and follow up with you via email as well.
Yes, you can email those to me and I can forward them over. I do have one. It says define first-time home buyer, someone who had a loan or was on title.
So first-time home buyer is anyone who has not owned a home in 3 years or less. I'm sorry, 3 years or more. So that is what our definition is.
Right. I'm sure a couple people are typing, so we'll give it a couple seconds. And like I said, you're more than welcome to unmute if you don't feel like typing as fast as you can. Give it a few more seconds. Looks like there aren't that many questions. You ladies did an amazing job, or looks like what the comments are. I will say, like I mentioned at the beginning, you will be sent the recording as well as the presentation slides and all of the links mentioned in today's presentation. I'll try and hopefully get that out tomorrow, if not tomorrow, Monday. So it'll be from me. And I'll also provide the dates and information for the other 2 webinars that will be in this 3-part series. So with that, it doesn't look like anyone has any more questions. So thank you again, Monica and Marlena, for joining us today and spending a little part of your afternoon with our members here in Arizona. And then thank you for everyone else that joined us today. I hope everyone has a great rest of your Thursday.
Thanks, everyone.
Thank you. Bye-bye.
Thank you so much.